Hey everyone, it is Julie here with TipRanks, and today we're taking a look at two healthcare stocks that score a perfect 10. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. Today we found two stocks in the healthcare sector that score a 10 out of 10 on the TipRanks Smart Score. This, of course, looks at 8 unique metrics and measures a stock's likelihood to outperform the overall market. On top of this, both of these stocks also have a strong buy consensus from Wall Street. So today we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We found today's companies using the TipRanks Stock Screener. Found right under Research Tools with the Stock Screener, we set our metrics for a 10 out of 10 Smart Score, double-digit upside potential, a strong buy consensus, and the healthcare sector, and that gave us our list of companies down below. Just before we get into today's stocks, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. You can download the TipRanks mobile app using the links in the description down below so you can access all the latest stock news and your favorite investment research tools on the go. Now let's jump right into our two 10 out of 10 healthcare stocks. First up is a company called Neurocrine. They trade under the ticker NBIX, currently priced at $146 per share. Their stock has climbed 44.5% over the past year. In the last 3 months, they've gained 6%. Their 10 out of 10 Smart Score does come with increased hedge fund activity, bullish blogger sentiment, and very positive crowd wisdom, where the number of portfolios holding the stock has increased by over 10% in the last 30 days. Neurocrine is a biopharmaceutical company that is dedicated to providing breakthrough treatments for patients with rare and under-addressed diseases. Founded back in 1992, the company focuses on treatments of neurological and endocrine-related diseases and disorders. Their diverse portfolio includes FDA-approved treatments for tardive dyskinesia, chorea associated with Huntington's disease, endometriosis, and uterine fibroids, as well as a robust pipeline, including multiple compounds in mid to late phase clinical development across their core therapeutic areas. Just last week, the company announced the launch of their Ingrezza capsules for dysphagia. This new sprinkle formulation is indicated for treatment of adults with tardive dyskinesia and chorea associated with Huntington's disease. The capsules are now available through the same network of specialty and local affiliated pharmacies that distribute Ingrezza. And back at the start of July, Neurocrine announced that the FDA had accepted 2 new NDAs, or new drug applications. They accepted these NDAs with priority review designations for crinecerfont in the treatment of children, adolescents, and adults with classical congenital adrenal hyperplasia, CAH. If approved, this would be the first new treatment option for CAH in 70 years. Neurocrine will be sharing their Q2 earnings report in about a week's time on August 1st. This does follow a mixed report back in May for their first quarter, where they did miss earnings per share but did see a revenue beat. For their Q2, analysts are anticipating earnings per share of $1.13, which would be a decent increase over last year. In their Q1, however, they did fall short, coming in at 42 cents per share. While their Ingrezza net product sales grew 23% year over year to $506 million, total revenues came in at $515 million. The company said with their new NDA applications, positive phase 2 results, and the deepest pipeline in the company's history, Neurocrine is well positioned to become a leader in neuroscience. Just a couple of weeks ago, we had an analyst at JP Morgan who reiterated their buy rating and increased their price target on the stock. They noted multiple factors, including the potential efficacy of Neurocrine's investigational drug in treating schizophrenia, which is expected to show significant outcomes in an upcoming phase 2 study. The anticipation of a positive result is heightened by the adaptive trial design and the indication that the investment community is comfortable with a more modest improvement threshold compared to competitors. On top of that, they think their market valuation, due to underappreciation of their pipeline products, has led to an increase in the projected peak sales figures. The stock does come in as a strong buy based on 20 current analyst ratings with 15 buys and 5 holds. And the average price target comes in at $165, which would imply an upside potential of 13% from current prices. Looking at our ratings down below, on the low end, we do have a hold rating here from Mizuho at $140, which would imply a downside of about 4% from current prices. Our high-end price target comes from Oppenheimer at $216, which would imply an upside potential of about 48%. And our second 10 out of 10 stock today is Sarepta Therapeutics. They trade under the ticker SRPT, currently priced at $146 per share. Over the past year, they've climbed 40% and gained 14.8% in the last 3 months. They score a 10 out of 10 on the TipRanks Smart Score with very positive crowd wisdom, positive technicals, and increased hedge fund activity, with hedge funds increasing their overall holdings by 1.3 million shares last quarter. Sarepta is engineering solutions for rare diseases with science that is on the forefront of precision genetic medicine. They are in a daily race to save lives stolen or impacted by rare disease. Their platforms include gene therapy, RNA technologies, and gene editing. Last year, they announced FDA approval of Elevidys, which is the first gene therapy to treat Duchenne muscular dystrophy. The company also has drugs for treatment of limb-girdle muscular dystrophy and Charcot-Marie-Tooth disease. Their pipeline is comprised of over 40 programs in various stages across their 3 treatment areas. Their Q2 earnings report is due in about a week on July 31st and does follow a big earnings beat in their first quarter. For their Q2, analysts are anticipating a loss per share of 13 cents, which would be nearly half as narrow as last year's loss of 27 cents. This does follow a positive earnings per share beat back on their first quarter of 37 cents, which came in 36 cents better than analysts anticipated. The company saw net product revenues of $359.5 million, which was a 55% increase. Management said they were working with the FDA to expand the Elevidys addressable population, and if successful, 2024 could be the most profound year yet in their fight against the effects of Duchenne muscular dystrophy and a bellwether for the transformative potential of gene therapy for a rare disease. And on June 20th, the company did announce expanded U.S. FDA approval for the drug. Just last week, we had an analyst from Mizuho Securities weigh in on the drug and reiterate their buy rating. They noted strong Elevidys demand and strategic growth outlooks, saying that management's outlook regarding the adoption of Elevidys post-expansion is positive, citing strong early demand and encouraging signs from payers on coverage. They also said that the Sarepta management team has expressed a willingness to pursue business development opportunities to catalyze future growth, with an eye on the cash flow prospects bolstered by Elevidys. They're open to considering strategic transactions, particularly beyond 2025, while being prepared to act sooner if an appropriate deal presents itself. With 18 current analyst ratings, Sarepta Therapeutics does come in as a strong buy with 14 buys and 4 holds. And the average price target of nearly $200 would imply an upside potential of 36.5%. Looking at those recent ratings down below, we can see Mizuho here at $200. They're actually kind of in the middle of our price targets here. Our high end comes in at $235 from Needham, which would be an upside of 60%, while our low end price target is a couple of older holds here, one back from June from Cantor Fitzgerald at $128, which would be a downside of 12.5%. So that is a quick look at 2 strong buy healthcare stocks, both scoring a 10 out of 10 on the TipRanks Smart Score. Let me know your thoughts on these companies in the comments down below. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you're always doing your own due diligence and research. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.